Everybody, we're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the US stock market. So make sure you hit that like button if you haven't already. Hit that subscribe and notification buttons as well. That way you're alerted to when we release new videos. We do release bonus content from time to time, so make sure you are alerted to when we do release those. Now the nightly and weekend videos, like tonight's video, focus on mostly identifying triggers and targets for trades ranging from, intraday trades, scalps, just day trades, all the way up through long-term swings or leap trades as well. So if you want a deeper dive into exactly how we set up our charts, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. Going through things like setting broadening formations, levels of support and resistance, things of that nature. And then if you are not familiar with the STRAT, make sure you check out the link in the description of this video. There's a free PDF quick reference guide that we've got out there for you. Gives you all the basics for the STRAT, touches on broadening formations as well, and basically everything you need to know to understand price action, deeply and easily, right? It's probably the easiest way to observe price action. So go ahead and check that out if you haven't already, or if you're not familiar with the strat. But yeah, I encourage you to watch the full video. We've got triggers and targets for all time frames, so give some pretty good insight. And let's take a look at the agenda for today's video. First, we're going to do a recap of the price action from today, Friday, March 13th, before we zoom out like we always do and take a look at the week, month, quarter, and year. Then we will take a look at the market makers' expected move for next week, the week of March 20th. And then finally, we'll zoom back in to set the 4-hour markers and the triggers and targets for Monday, March 16th, as well as the full week of March 20th. And then we'll just do a review of the triggers and targets for the month, quarter, and year as well, all right? So just looking at the charts today, starting with the 5-minute like we always do, this is how we take advantage of the proven and repeatable strategy that we talked about at the beginning of the video, right? And that strategy is quite simple. You take the opening print or the first traded price of the day and you watch price action from there. If you get higher lows at or above opening print, then you want to look to get into calls and you want to target the overnight high and previous high a day. If you get the opening print and price action that pushes down and then you get some type of lower high at or below opening print, then you want to look to get into puts and you want to target the overnight low and previous low a day. All right. So today was, it gave some on both sides of the equation, right? There was the higher low on the 1-minute time frame to the upside. So there was some, a scalp to be had very early on. But then we got, if you, aren't trying to operate on a chart with a lot of noise on it like a 1-minute does, and you want to look a little less noise, but still on a small time frame, we usually like to just stay on that 5-minute for those, opening 30, 45 minutes to an hour of price action. At the same time, having the other time frames on our other charts, right? So we can still look at them all at the same time, right? So we've got multi-charts, and then on the big chart, we've got the 5-minute so that we can start identifying, where we can enter and exit on that proven strategy, right? So if you were watching the 1-minute and you found the higher low in here, and you got price action that shot up to previous high a day, obviously that's your ultimate target for that particular move, right? You're above overnight high already. So, for all intents and purposes, that is done, right? You could have sold your whole position there and, not think twice about it, especially because we didn't have very much momentum at that point, right? So we hit market makers expected move high for the day. We hit previous high a day, and we just barely poked into the gap. But then that's what we were rejected by, right? We pushed down, we got a higher low, pushed back up for one 5-minute candle, but then ultimately set a lower high. And that's where we entered. We went ahead and took, we weren't quick enough for the 1-minute. Sometimes we'll watch it, but just frankly today we weren't. It caught us. I don't want to say it caught us off guard, but we were willing to wait a little bit longer this morning than to try and get in on the 1-minute. For whatever reason, it's Friday. We generally cut things a little short on Friday anyway and just get an early start to the weekend. So no need to have any, real added stress on Friday morning. So we waited for the 5-minute and it played out for us, right? Frankly, we were looking for the higher low bounce off of the overnight high, but the internals were not suggesting it. And it happened pretty quickly that we got the that the lower high was kicked in. So we went ahead and took that lower high, right? And at the once this two up, I'm sorry, the two down tick down on the two up, locking this in as a lower high. Went ahead and entered there. Almost got shook out of the position almost 5 minutes later, but luckily it made a lower high and we were able to stay in. We took that down to that 50.76 level and, obviously made that lower low, got the bounce there. And we just wanted to watch for the look to see if we're going to get the higher low rejection off the opening print, right? If we push back through opening print, came back up and, just poked above overnight high, came back down and made some type of higher low here, we would have been out. But, we made the lower high, came back down here. Now we made a higher low, and this is where we were getting ready to, pull the trigger again if we tested that opening print. Luckily, we put in that lower high, went to lower low, and we just sat on this 50.76 level. At that point we did sell part of the position. I think we got there was the higher low. No, I thought we had a higher high. Maybe it was right. Yeah, it was right here. I have to go back and look exactly when we sold, but there was a higher low and then higher high off of this 50.76 that we sold a majority of the position. But again, we don't trade too much on Friday after the morning, so I didn't want to really hold too much. We did hold some runners and kind of walked away at the desk at that point. So, after, what was this, 10:45 to 12:30, we got out about noon. So we had about an hour and a half of sideways action. No need to sit there and stare at the charts for the rest of the day. So, we walked away. We do have a couple of put swings that we held on to. We'll see what happens over the weekend. It's very newsline sensitive market right now. A lot of geopolitical stuff going on. We had CPE released this morning. Still economic numbers being released and things of that nature too. So there's plenty of room for those swings that we had to get wrecked or no longer be in profit by the time Monday comes around. But by the way things shaped up for the week, we feel decently confident going into the weekend, right? So, we had a good week, capitalized to the upside early on, capitalized to the downside in the second half of the week, and we'll take that good feeling into the weekend and see how things turn out on Monday. Just zooming out a little bit, again, we had a lower high on the 15 to keep us down, another lower high, even though it didn't make. Looks like it made an equal low, maybe a higher low here. Even though it made a higher low here, there was a lower high here, which obviously sent price down to the low of the day. It looks like a lower high was made here and a possible lower high here too. So, nothing on the 15-minute that should have shook you out of your position as well. We got it was a higher high to start out the day than the previous high, but that obviously went down and we made this lower high. So, downtrend on the 1 hour, downtrend on the 15. Let's take a look at the 4 hour, get a cleaner chart. All right, we got the 4 hour. So we've got this was a slight higher high, so we had this broadening formation. So slight higher high in comparison to these two highs right here, but we got that higher low and then ultimately a lower high. So a downtrend has started, at least on the 1 hour. We haven't made the lower low to really kind of lock that in. Excuse me, but we've got the lower high obviously to start us on that way. So we'll see what happens. But again, not exactly bullish for the day on really any of the time frames. No real reason to try and swing calls into the new week unless you're just running based purely off of position, right? If we look at things where we're at right now, I'll go ahead and pull this out for us. Just be visual. Right, just roughly, right? That's the zone we've been or the range we've been trading in. Oops, if we can make it bigger. And we're just sitting at the bottom of it, right? So still got to be kind of patient. See if we get more downside with this lower high here, or is this going to be set? We set the lower high, but was that just to set another higher low to establish more of a base, a solid foundation at this support level to go back up to the top of the range? We're just gonna have to be patient and see on Monday, right? From the day chart perspective, let's remove that real quick. We did end up making a higher low, turning yesterday into a higher low, just barely. Actually, it's pretty small probably for a lot of people. There we go. So yesterday was since we went 2 up today, that locked yesterday in as a higher low, but we just barely went 2 up. Couldn't even fill the gap there and retest last week's 50% or the previous week's 50% level. So inverted failed 2 up. It's looking like a lot like this could actually turn into a lower high. So again, just got to be patient until the new week starts. Monday should give us a decent amount of information, right? That's everything from the day chart and down. Let's zoom out a little bit more here and look at the week. Get a clean chart here. There we go. So the week, yes, we did go 2 down, right? But it was for all intents and purposes, a failed 2 down because we closed green, right? The open was here, closed here. Yeah, we do have a wick on top, but what it means is the bulls ultimately did end up winning, right? The bears couldn't push, they barely pushed down at all. The bulls not only finished green, but showed that they're willing to explore even higher back up into that range. So if we go 2 up next week, then we can put this broadening formation in. Come on there. All right, this would be a weekly broadening formation, so it needs to be purple. Right, so this would be broadening formation there, and we're just looking at expansion of range, right? Here's the range we've been in at the beginning of the year, and it just expanded a little bit. So, we'll see if we go 2 up next week. Are we going to hit the middle of that range and reject and push back down, or we're going to push through and get all the way back to the top of the range? We just got to wait and see, and just wait for our triggers to trigger and take them to the targets, right? So nothing overly bearish about this. Again, it is a lower low, but we're coming from a higher high, showing that we're just making a broadening formation, expanding the range. Let's take a look at the month here because that's a little bit more telling as well. Let's get a couple of those broadening formations off of there. There we go. So the month we did go 2 down, right? 2 up, 2 down, but we reached magnitude, so that move is complete. Now, although we reached magnitude and that move is complete, we did go past that, which then triggered this one combo 2 up, 2 down. So we've got to still really be careful on the month chart, right? We don't want to get back down here into this $45 level to get back, put this one combo 2 up, 2 down back in force, because that doesn't take us to the low of the one. That takes us to the low of the candle to the left of the one, which is all the way down to that $28 area. So again, if you're a bull, you don't want to see any more pressure back down to that $45 area. If you're a bear, or if you're a long-term bull just looking for better entries for long-term gains, then you may be actually hoping for that to re-trigger and pull back to that 28. Now it gets a little bit more dangerous there because we do have these gaps pretty close to the $28 level that could act as further magnets to pull us back further. But for all intents and purposes, we're coming from a higher low, higher high in the trend count. So uptrend right now since the April low. Not a whole lot to say there on the month perspective. Again, just trying to be patient to see how this is going to play out. Do we continue to push down for that strat, or do we push back up, make this a failed 2 down, and go into April looking for a 2 up after another higher low, or creating another higher low to continue the trend to the upside, right? We just got to be patient. It's the week, the day, the 4 hour, the 1 hour. Those are really what we're playing right now, and everything high and those higher time frames. We're just having to be patient, right? If we take a look at the quarter, right? If you're familiar with this channel, you already know 1 combo 2 down, combo 2 up. Magnitude is the candle to the left of the 1, so that's up here at 70.08. It's run its strat, right? Run to completion. Nothing else to do here. Gotta wait. The year, same thing. 2 down last year, 2 up this year, 2 down, 2 up reversal. Magnitude is the candle to the left of the 2 down, 70.08, just like on the quarter. We ran the strat. So higher time frames, got to be patient. Yes, things have started to neutralize a little bit, but nothing's broken down, right? We're still in an uptrend on the month. The quarter is a broadening formation. We've made a higher low, higher high on the year, so it's starting an uptrend on the year again. Just patience is the key right now. If you're a range trader, you're probably having a great time right now. If you're a trend trader, hopefully you're sitting on your hands and not getting chopped up. But you're just gonna have to be patient, right? when it's a trend, when the market is trending, you'll have your fun again, and those range traders will be waiting around for another range. So everybody gets their chance. Patience is just going to be the key, right? So yeah, that's everything from a zoomed in and zoomed out view. Let's take a look at what do we have now? Market makers expected move, right? To calculate this week's market makers expected move, or this coming week's market makers expected move, if you use Thinkorswim, you can go to the options chain and you can look at the chain for March 20th, and you can see over here at the right, there's a number in parentheses, plus or minus number, plus, and this week happens to be plus or minus 8.818. So the market makers are expecting a plus or minus $8.82 move for this coming week, and that's from the close price of 50.72 on Friday. So if we go over to our notes real quick and we take a look, we've got for March 16th, 202 trading days left in 2026, and with the close price on Friday was 50.72, right? So with that $8.82 move, that gives us an expected range of 59.54 to 41.90 for this coming week, right? So if we go back over to the charts and we take a look, let's take a look at the week chart first. Week chart, and let's go to a chart that has the expected move. There we go. Make this a little bigger. If we look at this in relation to the previous week's candle, we're looking at either a 2 up or a 2 down or a 3 possibly, right? Sometimes that expected move will, the high will keep you within the previous week's range, and the low will have you looking at a 2 down, or vice versa. But in this case, got a pretty even distribution here in that, if we go to the market maker's expected move high without breaking the previous week's low, then we're going to have a 2 up on the week. If we go to the market maker's expected move low without breaking the previous week's high, then we've got a 2 down on the week. And if we go, to the low after going to the high, or if we go to the high after going to the low, then we've got a 3, or a bullish or bearish, whichever color it ends up being, an engulfing candle, right? So just keep that in mind. If we do get up to the market maker's expected move high again, that should flip the month green, which is important. If we take a look at the upper left hand part of the page here, we've got the time frame continuity, right? This week it did end up finishing green, and then we have the quarter in the year that are green. So if next week goes green and we go get above the month flip, that turns the month green, and then we've got week, month, quarter, and year all green, which gives a lot more momentum to the bulls right now. This is part of the reason why it's chopping right now, is we've got we don't have any continuity on the time frames, right? We got the 2 highest time frames that have continuity, but the time frame right below them is the opposite. So that's another reason why we're getting a lot of this chop, right? If we do go to the market maker's expected move low for the week, again, full time frame continuity flip, right? Because the quarter and the year flip are down here at 45.13. If we get down to 41.90, then the week, the month, the quarter, and the year are red, giving you more momentum to the bears in that case, right? So it's going to be a pivotal week if we make it to either of the extremes. Now, if it ends up just being an inside week, I guess that's a pivotal move as well, because it's indecision, but we're going to have to exercise patience, right? I've been talking about this for about 2 weeks now. So for a third week, we're going to have to just exercise some patience, right? And that is the market maker's expected move. So let's go ahead and keep the video moving, and let's talk about how we will attack things on Monday, right? First, starting with the 5-minute chart, early morning, there we go. So that we can talk about the proven and repeatable strategy, right? So as of right now, previous high day is 53.96. I say as of right now, as end of close on Friday. Previous high day, Friday's high was 53.96, and Friday's low is 50.04. Just a couple hours into after hours, we've got a pretty tight overnight range. So let's just say over the weekend, we get a range that pushes us up to, somewhere between the 138.2 fib extension. I'll activate that so you can see 138.2 fib extension of the April 7th low and this 4-hour downtrend line. We'll say we get up somewhere in between there, right? And then on Monday, let's say we open somewhere in the middle of the range. Okay. using the proven and repeatable strategy, right? We wait for a higher low, right? So if price opens here and we push up, maybe we get a rejection off of that 138.2 fib extension and we pull back, but we get a higher low at or above this opening print level, then we want to look to get into calls. Our first target being overnight high, not a lot of magnitude there, but you can go ahead and scale out some if you want. And then ultimate target for that move would be previous high a day. At the same time, to the downside, if price opens and we push down and maybe we get a bounce off of last year's high, last quarter's high, 50.76, and we get a bounce, but then we ultimately get that lower high at or below opening print, then we want to get into puts and we want to target overnight low and previous low a day. All right, that's the proven and repeatable strategy. Higher lows at or above opening print, we want to get into calls targeting overnight high and previous high a day. Lower highs at or below opening print, you want to get into puts targeting overnight low and previous low a day. Obviously, if we reach those extremes with any type of momentum, then we can turn to the 4-hour notes and the 1-day notes for our triggers and targets on those time frames to see where our next targets would be. But for that particular move, making a move based off of the higher low at or above opening print or the lower high at or below opening print, those are your ultimate magnitude. So it would be perfectly reasonable to fully scale out at that point, right? You can see just from Friday's price action, right? We opened, we pushed up, we went to previous high a day, we rejected and went back down, right? So if you were looking for further momentum past previous high day, the gap close, and you didn't take your profits here as the proven and repeatable strategy tells you should, then you probably either lost out on some profit or went red if you were holding on to it too long. So just keep all that in mind, right? Let's go to the 4 hours so we can talk a little bit more about more of a full day trade, maybe even overnight swing trade, right? And we've been talking about how, let's bring this all in a little bit. Hopefully those on phone can see this well. We've been talking about how we have the larger range that we've been trading in since January, beginning of January, right? There we go. This is essentially the trading range we've been in. We popped up in here, got a higher low to show support at this level, pushed up, little look above and fail, back down to the bottom of the range, little look below and fail, back to the top of the range, little look above and fail, back to the middle of the range, before a look above and fail, back to the bottom of the range, into what looks to be a look below and fail if we can make this support, right? So we're at the bottom of the larger range, and we're also at the bottom of a smaller range as well. So that would really lend itself to be a pretty solid level of support, but it could also open the floodgates if that support is broken, right? If we go below, if we break below that, push back up and make some type of lower high here to push down and continue this downtrend outside of the range, then that can kind of open the floodgates as far as downside action. So you do want to keep that in mind. We did trigger the 1, 2 up, 2 down today. It did not reach STRAT completion, so that leaves the door open on Monday for the continuation of the 1, 2 up combo 2 down, which would take us to the low of the candle to the left of the 1, almost to that 49.33 area again, right? So a little bit more that could be had to the downside, more magnitude to the upside if we're talking about just the STRAT reversal move, right? If we're looking at a 2 down, 2 up reversal, entry is at the high of the 2 down, exit is at the high of the 2 up to the left of the 2 down. So that gives you a lot more magnitude if we're looking at playing just the STRAT reversal on the 4 hour. But that would then also put us in, I don't want to say convoluted, but kind of a messy 1 combo 2 down, 2 up to push us back up to this $58 level. All right. So again, patience. Right now, currently we are technically in a down, the start of a downtrend. We've got the lower high, right? We haven't got the lower low yet. So first checkbox ticked for the lower high, but until we make that lower low, we're not truly in a downtrend. But if that lower low does kick in, then obviously we're breaking the support of last quarter, last year, those highs right there, and then last month's low 49.33, we break below that. Now we're looking at a bigger range of downside for us, right? So just keep that in mind. We got options to the upside and downside. Just be patient, wait for the trigger to trigger, and try and take it to the target. All right, let's take a look at the 1-day chart, and right? So on the day chart, we did trigger this 3 combo 2 up, combo 2 down, right? The magnitude would take us back down to this $44 level. Has not reached strat completion, obviously, and has presented the possibility of today or Friday being a lower high, right? So if we go 2 down on the day on Monday, that locks Friday in as a lower high, and then we're looking, a much better chance of completing that strat completion down here at the $44 level and possibly getting into that gap again. Now, it's had a couple of opportunities to get into this gap and into this gap, and it hasn't. So, do we push down? Or do we complete the strat and bounce and go back to the top of this smaller range that we've been in? Quite possibly. But, only time will tell. We don't make predictions. We just take these triggers and targets and, we go with them. So if we go 2 up Friday to go 2 down for a 2 up, 2 down reversal on Monday, entry is at the low of Friday, exit is at the low of Thursday. So not a lot of magnitude there, but we reach that point. It puts us back in this 3 combo 2 up, combo 2 down. That should take us back down to 44. To the upside, we did trigger a 1 2 down 2 up reversal. So if that were to continue, that should take us back up to that $58 level. But again, we've tested that level twice and haven't been able to break it. So if we get up there, does that just mean we're coming back down to the bottom of the range? We'll see. Again, no predictions. We just take the triggers and targets how they come. Been looking at the charts quite a bit, so let's get back to the notes here and let's just kind of finish things up this way. So again, for Monday, March 16th, there will be 202 trading days left in 2026. Close price on Friday, March 13th was 50.72. We don't know what the week flip will be yet, simply because we haven't opened the week up for trading yet. At the same time, though, we know that the month is red and it doesn't go green until we get back above 58.15. The quarter and the year are green already, but if we do get down to that 45.13 level, then they flip red and we've got full time frame continuity to the downside. So again, next week it'll be quite pivotal for the time frame continuity, right? We know that the week's expected move, the market maker's expected move for the week is plus or minus $8.82, giving us an expected range of 59.54 to 41.90. We know where our gaps above are and we know where our gaps below are. Always keep those in mind because they can act as magnets. And we talked about from a scalping perspective, we want to look for higher lows at or above opening print to get into calls, targeting overnight high and previous high a day. Or if we get lower highs at or below opening print, then we want to get into puts, targeting overnight low and previous low a day. All right. We also talked about on the 4-hour time frame, we got the possibility of a 1 2 down combo 2 up triggering at 50.04. Magnitude of that move. I'm sorry. To the upside. Sorry, to the downside would be a 1 2 up 2 down triggering at 50.04. Again, not a lot of magnitude there. About 47 cents of magnitude, or what's that? 51 cents of magnitude. But we do have some extended targets out here, including that 46.79 level that we've been talking about for quite some time now, which looks to be the line in the sand. If we get a lower high below that level, then I think that we've got a bit more downside action to explore, right? If we can continue to keep that as a solid support, then possibly getting back up to those $70 levels. Again, to the upside, we have a 2 down combo 2 up that would trigger first at 51.17 with the magnitude of 53.96. We are in a bit of a downtrend on those smaller time frames, so we do have these other points of inflection before we actually get to magnitude where price could either stop and go sideways or reject. So keep those in mind. Should we get to that 53.96, though, that does trigger the 1 combo 2 down, 2 up with the magnitude up there at 57.78. All right. On the day, we talked about to the downside, there was a possibility of a 2 up, 2 down reversal, triggering at 50.04, magnitude of 49.53. So again, not a lot of magnitude there, but if we get below 49.53, then that does again trigger this 3 combo 2 up, combo 2 down, and that magnitude is all the way down there at 44.53. All right, may take a couple of days to get there. We talked about that when it first triggered yesterday, so just keep that in mind. To the upside on the day, if we go 2 up on the day, that gives us a 1 2 down combo 2 up, triggering at 53.96, magnitude of 57.78. So in between there, again, we are in a slight downtrend on those smaller time frames. We do have these points of inflection in between before we get to that 57.78 for on the day chart, right? If we do get to that 57.78, which is $4 move is not unheard of for SOXL, so it's quite possible we get there. We do have that further out extended target, not too much further extended, just 30 30 cents basically to get that gap close again. But its prices tried it twice this week and it couldn't close it. So we'll have to see. All right, for the week, if we go 2 down on the week, that gives us a 2 down continuation, triggering at 44.53. No magnitude for the move because it's not a reversal. It's just a continuation. So we do have a trigger, but targets, we've got to look to the left to see where our levels of support are to see those further targets, and that's what we've got for you here. To the upside, this would be a reversal, 2 down, 2 up. So there's a trigger and a magnitude. But again, noticing that we are in the downtrend on those smaller time frames, we've got these points of inflection where price could either reject or go sideways. Or, if we do make it to magnitude and we've got some momentum, we've got some extended targets out here for you. 74.21, keep in mind, is the all-time high. Just again, talking about the month, we triggered the 2 up, 2 down at 49.33. Got down to 45.08 to complete that and actually go below it to trigger the 1 combo 2 up, 2 down, which has a magnitude down there at 28.12 like we talked about. But so far we did find support at that $45 level. But should we break down below that $45 level, we do have these points of inflection that where price could either bounce or go sideways before reaching magnitude for the STRAT reversal, right? If we go to the upside, right, then we have, got to get all the way up to 72.36 to get a bullish engulfing candle or a green 3 if we're talking about STRAT terms. But if we are going to get a bullish engulfing candle on the month, we got to get up to that 72.36. Still quite a ways away. Still got half the month left though, so we'll keep talking about it, or at least bringing up the numbers, but not going to get too serious about it until we start to push up closer to that level. At that point, we'll get a little bit more serious about it. But until then, we just know that that's where we got to get. 72.38 is where we got to get to. We already talked about the quarter ran the STRAT, the year ran the STRAT, so not much there to look at from that perspective. Again, just got to wait for these smaller time frames to make their moves, right? But that's going to kind of wrap it up for today's video. Those are your triggers and targets for everything from a scalping perspective all the way up to the 1-year chart. Again, we try and jam in as much information as possible without taking up too much of your time. So we do hope you enjoyed the video. If you did enjoy the video, a thumbs up goes a long way. All right, we got a free channel, just trying to give out free information to try and help people trade a little bit better. So a free thumbs up does go a long way to help the channel. A share goes a long way too. If you know someone and some of this information may help them, again, they don't need to adopt the whole strategy that we use. If you can find certain things in our strategy that you can add to your strategy to help make your strategy better, that's all we're looking for as well, right? We're not out here trying to sell a strategy or anything like that. If that was the case, then obviously we would be, trying to monetize it or something. But, we're just trying to show a proven strategy that can work and help make trading a little bit better for folks. So again, thumbs up goes a long way, but we do want to give a shout out to all those who continue to tune in, every day, if not every day, every other day or something like that. There's a certain number of folks that are consistent in our comment section and in the viewing channels. So, big thanks to those that continue to tune in, right? I feel like we've made a nice little community, and it makes us feel like we're actually doing something that means something. So thank you to all those who continue to tune in, and we'll just wrap it up here. If you're watching this over the weekend, Saturday, Sunday, I hope you get some good rest Sunday night and wake up refreshed on Monday morning, ready to trade. If you're watching this Monday morning, Monday during the day, we hope you got some good rest last night, and we look forward to getting out there and trading with you.